I think entrepreneurship continues to be alive and well, and the message of the Rise of the Rest book is it just isn't alive and well just in places like Silicon Valley. It's places all around the country. They're developing a strong startup ecosystems, and that's helpful because entrepreneurs who historically would have to feel like had to leave where they were from to go to the coast to be part of the innovation economy now can stay and build and scale there and create jobs there. So it's been great to see the momentum over the last decade since we started Rise of the Rest. The pandemic has certainly been an accelerant, almost a tipping point in terms of more people deciding to move other places. So we've seen a dispersion of talent and a dispersion of capital and a lot of great ideas that are really kind of reimagining healthcare and food and agriculture and financial services and transportation and education. Some of the most important aspects of our lives and some of the biggest industries are really up for grabs in this next phase.
Rise of the Rest is the name of the book. It's the name of the seed fund as well, Steve. What about rise of the rates that we've seen over this year? To what extent is that hurting the startups that you talk to and you interact with?
Well, certainly when rates are higher, there's a little bit of a pullback in terms of the stock market valuations as we've seen, and therefore a pullback in terms of particularly the late stage private market valuations, the pre-IPO valuations. So we've seen that dynamic over the last 18 months or so, which frankly I think is healthy and not all that unexpected. A couple of years ago, things were getting a little frothy in that later stage. And so we're seeing a correction with the growth stage of the market. On the earlier seed side, it's not quite the same impact, and particularly in these Rise of the Rest cities, the valuations of the seed investments we've done with our Rise of the Rest fund, and so far we've done over 200 investments in 100 different cities. Valuations tend to be about half of what the valuations are for comparable companies at the seed stage in places like Silicon Valley. It's a classic supply and demand. So much capital is focused on venture capital focused on Silicon Valley, not enough on other parts of the country. So that dynamic still creates a great opportunity for investors who are willing to do the extra work to identify promising entrepreneurs tackling big industries in dozens of cities all around the country.
Well, and that's a really good point that you talk about all of the innovation that's going on in other cities beyond Silicon Valley. Having said that, the collapse of Silicon Valley Bank and the fallout, what did you see as a result of that in terms of the work that you're doing and the investments that you're doing? Or none, maybe?
It was a problem. No question. Even though it's called Silicon Valley Bank or SVB, they actually banked startups all over the country, not just in Silicon Valley. And about half of the startups and about half of the venture firms in America were banked by SVB. So it's been very unhelpful. A number of firms are trying to fill the void and offer different products and services to both the venture funds and to the entrepreneurs, but it's certainly been a negative this year.
Hey, one thing we really wanted to ask you, and was about what's going on in terms of regulation. We've been talking a lot about the FTC suit against Amazon, right? Antitrust case. We've all been kind of waiting for this, and the accusations are that Amazon is monopolizing the online marketplace services by degrading quality for shoppers and overcharging sellers. How do you think about this?
Well, I haven't read the actual case. Obviously, as you said, it's been expected for some time. The FTC has gotten more aggressive on big tech. And
is that good? Is that good that they've gotten
more
aggressive?
more scrutiny of big tech, I think, is healthy. My focus is around the new companies, the entrepreneurs, the insurgents that want to take on some of the bigger incumbents, and making sure that there's an environment that allows innovation to flourish, entrepreneurs to be successful, including in areas of e-commerce. Or they have a similar case with Google on some issues related to search. So I think that scrutiny is appropriate. Exactly what happens, each court case obviously needs to kind of we'll have to see how it plays out. But I think it is important that we make sure we're erring on the side as a nation of making sure entrepreneurship can flourish everywhere, and big tech doesn't just get bigger, including, by the way, with AI. One of the big debates here in Washington around AI as it gets more attention is it going to end up being a few big companies getting even bigger, or is it going to be a broader, more dispersed innovation ecosystem, a little bit more on the open source side? And so we'll see how that plays out over the coming years. But the internet's now so important. Technology is so important. Every industry really is now tech enabled. Every company really is in some ways a tech company. It's not at all surprising that there's more antitrust scrutiny.
Did it ever feel like to you that AOL, in your days of founding and running AOL, was so big that it could have faced more antitrust scrutiny?
No, we actually did, and some of the News Corp and others at one point, filed suit saying AOL had too much control of the internet, and even when we merged with Time Warner, Microsoft, AT&T, others were trying to block the deal with that, that argument. And so, in that particular case, obviously, I hate to say it, but for a whole host of reasons, AOL fell by the wayside. New entrants, including Google and Facebook and others, kind of fell, took over, and it's because those news companies were able to start. They were able to raise the venture capital. There were not barriers to entry to allow them to start. So that's, to me, the philosophy we need going forward. Celebrate the successes we have in our country, including some of these great companies, Amazon and Google and so many others. But how do we make sure we're also creating environments so more of those companies can be the big companies of tomorrow, not just on the coast, not just in Silicon Valley, but all over the country, which obviously is why I wrote the book Rise of the Rest.
So how do we do that, though? I mean, we spoke to Diana Henriquez last week, who compared the power companies of the 1920s and 1930s and the regulation of the power companies to the tech companies, the huge tech giants today. And she says government needs to get involved with them. What does the government need to do in order to ensure that the rest can rise?
Well, I'm co-chairing the National Advisory Council on Innovation and Entrepreneurship here in Washington, and we're working on a national entrepreneurship strategy, which we'll be releasing later this year. And there's a number of facets to it. Some relate to talent, including immigration policy. Some relate to access to capital, including some of the work around Rise the Rest. Some of it relates to making sure there's continued investment in regional hubs. Congress passed the CHIPS and Science Act a couple of years ago and authorized $10 billion for regional hubs, but it's only so far appropriated $500 million of that. Some of it's making sure America continues to invest in the R&D, the technologies of the future to create the industries of the future. So there's many facets to it, but the overarching theme, I think, is how do you make sure this next generation of entrepreneurs can start and scale and do it anywhere in the country, not just a few big companies being able to innovate or only people in a few places like Silicon Valley. So it's trying to create a more inclusive innovation economy has to be a key part of the answer.
Steve, we're often so critical of other countries and their support of industries. I'm thinking about China specifically, but we are increasingly seeing the U.S., whether it's in the semiconductor space, whether it's in the EV or the energy transition, support industries here in the United States. Should we, especially when it comes to some of the more newer, innovative areas?
Yes, and again, there's sort of this long debate about industrial policy, long debate about how much of a role should government play. But the reality is the internet wouldn't exist if the government hadn't funded, DARPA, a research agency, a half a century ago, and then opened it up, commercialized access to the internet, and broken up the phone companies, so the cost of communications, came down. There are a number of decisions that really unleashed the internet. So having that government role, I think, is important. That the innovators need to respect the role of policymakers. And I actually think in the next decade, the two mega themes are going to be place and policy. That we're focused here at Revolution around place, particularly Rise the Rest. We think a lot of the big companies of tomorrow will have a policy aspect to them because of the nature of the industries up for grabs, and because Congress has passed legislation, about $3 trillion of legislation, the CHIPS and Science Act, the Inflation Reduction Act, the bipartisan infrastructure bill, that's going to really invest in these industries in a big way and create opportunities for investors, as well as ensuring that America has the right infrastructure, has the right technologies to continue to be the most innovative entrepreneurial nation in the world.